Rishi Kohli, CEO at ProAlpha Advisors, joining in to talk about the fundamentals of the market. Rishi, hi, afternoon. While it may look like we are outperforming the rest of the world, while there is that contagion fear as to what Turkey's economic crisis could actually spell into, do you think that this is just the brink of the problem and it could perhaps get into a contagion domino effect, and that would spell eventually bad news for us too?
Yeah, I mean, as we've seen in the past, many times that, these kind of macro news does have a spillover effect. So there could be some volatility if, problems on that front continue. But in the larger scheme of things, I would take a step back and think of, how the view is shaping up over the next 3 to 6 months, which both from a technical and a fundamental standpoint seem to be reasonably well placed for India, because overall the next 3 to 6 months looks positive on the medium term and long term technical charts, with a very long term channel being sort of broken out on the upside, almost on a quarterly basis. We'll find out at the end of the quarter, but in most likelihood it will break out to the upside. And from a earnings kind of standpoint, a little bit of recovery on earnings that everyone has been expecting for a long time has finally started happening, and that typically in the run up to the elections, I think markets can anyway remain strong. So I would be a buyer on dips only at this juncture from both perspectives.
Okay. Having said that, where is it that you're even planning to be contrarian and finding value, Rishi? Because it just seems like a very polarized market. Individual stocks have fallen, but some of them are cheaper on the back of poor fundamentals. The ones which have run up or held out are expensive. Where is it that you kind of generate that alpha, that outperformance?
Right. No, that's a very good point you've made, that it's difficult to select stocks from a fundamental standpoint right now, other than going to some mid caps, small caps, which look interesting. But as we've seen in the last 6 months, those have been the big pain points, and the longer term cycle shows that when mid caps, small caps have such a big damage, then they do not recover so easily. So I think the strategy I have had on the portfolio is to have a mix of a few high growth quality kind of stocks, and then a few mid caps which again have some earnings visibility and are continuing to deliver in most quarters and annual results, and that over time seems to hold up as per our quantitative analysis on the long run on these kind of fundamentals. So due to that reason, some stocks that I mentioned earlier, like Sterlite Optical Technologies, that has done very well since the last time I was on the show. It's up around 34-35%, and obviously there are reasons to it, with its Italian acquisition happening, seeming like it could have great synergistic benefits. Its quarterly earnings coming out very strong, high earnings growth expected over the next 2-3 years, with high ROEs, ROCs, operating margins. You're getting stock at a 20 times PE with earnings growth of 35 to 40% expected, and around 30% kind of average ROEs, ROCs. Obviously that is very attractive. So I think that has huge scope over the next 6 months to 1 year also, and even in the short term broadly, because you don't get that very easily. And then on a contrarian kind of side, I have Lupin, which I had added last time, and this time I've minorly increased its weight at the expense of Escorts, because there's some margin pressures and cost pressures building up on Escorts. But on Lupin, as we know, the entire pharma sector, and Lupin being one of the heavyweights, it's underperformed the last 3-4 years along with the sector. And in Lupin's specific case, they've been huge investments they did in the last 4 years, about $2.7 billion or so, between investment into R&D, capex, some acquisitions they've made, and a focus in the respiratory and specialty space. And obviously that meant the ROC is dropping from high 40% to low single digits, almost 10%, 9-10%. The earnings growth tapered off hugely. Free cash flows fell by 50-60%. So obviously all of that meant a derating. But that phase seems to be almost over, both again fundamentally, technically, fundamentally. Like I said, some of the investments they've done in some the new segments, respiratory and specialty, there seem to be paying off, and second half of FY19 there should be bigger impact that we end up seeing. And apart from that, technically on the long term charts, it's 66-67% down from all-time highs, which is typically a good long-term support, and it has started giving some positive signals on the monthly charts as well. So combining both of those fundamental and technical logics, we are positive on Lupin. So I would, those two stocks out of my list of 7 stocks look very interesting. One from a high growth, continuing to perform perspective, and one from a slightly turnaround kind of perspective.
About those contra calls, exporters it is today. As we see on our screens, it's a fresh low for the rupee. It extends its weakness now all the way to 85 paise on an intraday basis, and that's a fresh low really. 69.69 to the dollar right now for the currency, and that explains perhaps why IT as a pack, for instance, has been holding out well. So if you take a look at Tech Mahindra, that snapped its 4-day decline. You've got emerging market currencies which have weakened against a firming dollar, and that really is acting as a further tailwind for the entire IT space. Would anything be on your radar when it comes to IT, Rishi?
So IT, is interesting because Infosys, TCS at different points in time have been part of our portfolio, but right now I'm not included that in the basket because like I said, the portfolio is right now a mix of, high growth, quality with the reasonable upside steam remaining and some turnarounds kind of thing. So IT is somewhere in the middle because, what the kind of call I'm giving on Lupin, for example, right now is something where an Infosys would have, come up a year back, and but it's already played out a large part of its, move. Selectively, there are different IT stocks, Persistent Systems, Mindtree, some of them are looking interesting, but I think maybe by next month's call I may have an addition on the IT side. Right now it's still sort of watch and wait.
Okay, Godrej Industries numbers on your screen, and not that those are very standout set, flat, mildly down. You have the PAT performance which has come in at 128 crores. Revenue performance also nothing to really write home about as of now. I just want to very quickly, mark some of the movers in the session today, and you have to give it to GAIL, which is holding out post its earnings. Do you have a view on this one, the oil and gas sector per se, Rishi?
Sorry, I didn't catch what view.
The oil and gas sector. Do you have a view here? Because OMCs, ONGC, GAIL are doing their own thing.
The oil and gas sector, yes, of course. Sure. See there, I mean, obviously Reliance has been a big mover over the last year and a half and surprised a lot of people. And that is something which, continues to surprise on the positive side, obviously, with the kind of returns that they're getting from Jio now after the huge investments that went into it over the last few years. I think that has surprised a lot of people, and that could continue to surprise positively. On the technical side, again, there's nothing to complain on Reliance, and it continues to give very positive signals on the medium to long term charts. So overall, Reliance is something that one would be positive on. From the other stocks you mentioned, GAIL is the one which is looking most interesting, with good earnings, good technical formations, good quantitative kind of outputs that we are getting when we feed all the data into the models. So Reliance is something which I would bet on can continue to deliver over the next 2 years, and GAIL is something which now has started coming onto the radar, which could give strong returns over the next 1 year, I think.
Right.
What you're expecting in terms of some of the metal earnings? I mean, if Hindalco is anything to go by, could we see a similar trend from Tata Steel?
Sorry, I didn't catch what view.
Tata Steel.
Tata Steel, yes. Of course. Sure. See there, I mean, obviously Reliance has been a big mover over the last year and a half and surprised a lot of people. And that is something which, continues to surprise positively. On the technical side, again, there's nothing to complain on Reliance, and it continues to give very positive signals on the medium to long term charts. So overall, Reliance is something which I would bet on can continue to deliver over the next 2 year, I think.
Right.
Yes, metals are looking interesting. Hindalco, Tata Steel, these some of these were looking interesting again from a fundamental technical perspective. Some bit of the move has played out, but I think a little bit more is left for both these stocks. But having said that, I mean, typically these are more of trading bets when it comes to metals, because short-term moves keep happening along with the results and some global news and the technicals. So one has to keep all those in line, which is something we don't do very often in the portfolio design that I've done on this show. But from a near-term perspective, these stocks look good.
Okay. Having said that, give us your own take on how you're really scouting for opportunity within the consumer space. Some of the consumer companies have given out great results, great volume performance, great demand delivery. But again, finding a good price there to buy is difficult.
Right. Yeah, so as you know, Asian Paints is there on my portfolio and got included, I think 2 months back. And at which point, you all had asked me also, because it's a very, very pricey stock in terms of the PE. And, we had some discussion on why not Unilever and why, Asian Paints. That stock has done well in the last 2 months, up 10%, just like most consumer, leading companies being up 10 to 15%. But you're right, I mean, it is a little risky because, the PEs are very high. So as long as the growth keeps coming in, it's all fine. But, as the growth tapers off, some of these stocks could take a big hit. But what happens is that in some of these segments, for example, for Asian Paints in the paints category, it is a market leader and has a huge monopolistic kind of business in some premium segments, which have higher margins also. So because of these kind of issues, I mean, it's not going to be very easy for the growth and the numbers and the earnings to start tapering off in such a stock, which is what had given me some comfort on Asian Paints. Also, paint volumes correlate with GDP being 1.5 to 2x of that when you look at the long-term data. And with GDP growth having been on a down cycle, Asian Paints slightly underperforming last 2 years. Made sense, but now it's expected to this GDP growth is expected to pick up, so Asian Paints is looking interesting from that perspective also. So given that there is no other sort of large cap competitor that Asian Paints has, those are the couple of reasons that make us comfortable with Asian Paints. But the same thing of a high PE will remain, but till now one has to take a 6 monthly or an annual kind of call on such a stock. So right now, from a 1 year forward perspective, it gives me comfort and therefore it's there. But as the numbers keep coming every quarter, we will revisit this topic.
Okay. Kerala Health, and optically the numbers might seem very impressive, but the reality behind those numbers is another income component of about 100 crores, adjusted for which you will have a baseline on the PAT front at 260 crores odd, roughly like that. And that's why 360 crores actually, and I think that is in line with estimates. And so you're looking at the market just giving off the gains on Cadila Health. Remember, the business has either ways done well. If we bring up a period chart for Cadila Healthcare, it may be weak, but it has relative strength to the rest of the pack within the pharma space. But I'll ask you this, Rishi, very specifically, Cadila Health, I mean 360 crores would be in line with what the street was expecting on earnings. Sales have looked okay. Why such a big disappointment in terms of the price reaction?
So, I mean, as we know, I mean, these short-term price reactions keep coming in. It's sort of a buy the rumor, sell the news, or sell the rumor, buy the news kind of thing. So, if the stock is held up going into the event, invariably it sells off. So I think, I mean, in a day or two, you'll know the real picture. But as of now, most of these pharma stocks are sort of behaving in line, where they're looking to give interesting signals from a long-term perspective. But in the short term, obviously, one can expect a lot of volatility, given earnings, given the fact that, certain things are playing out for them, certain things are not playing out. there are various issues. There have been various issues in the pharma sector, and different companies are, tackling different versions of these. So as that happens, there will be some dispersion in the sector. But right now, I think everything is volatile and will play out over time. So looking at very, very short term, just around earnings, is not something I would do on such a stock. From a medium to long term perspective, Cadila is, quite attractive and is more of a quality stock, has done much better than a lot of the other players in that segment. So overall looking okay only. But
Rishi, great
like I said,
you.
in my portfolio, it's more Lupin because that has a lower downside and a higher upside.
Okay, Rishi, great having you on the show. Thanks so much.